Welcome to the Money Ocean channel. Today, we're taking a deep dive into SoFi stock, one of the most intriguing opportunities in the fintech world right now. If you've been wondering whether SoFi is a stock worth adding to your portfolio in 2024, stick around because we're about to break down everything you need to know before making your move. As 2024 approaches, the financial technology space continues to evolve rapidly. Among the companies making the biggest waves in this sector is SoFi. This digital-first company has become a leader in personal loans, investment services, and banking. SoFi's innovative products and customer-first approach have made it a top contender in the fintech market, but there are both opportunities and risks that investors need to understand. Now, here's the deal. The fintech space is fiercely competitive. SoFi is up against some major players in the financial world, from legacy banks to tech-savvy upstarts. To stay relevant and continue growing, SoFi must constantly push the envelope, innovating and adapting faster than its competitors. And that's no easy feat. The landscape is always shifting, and regulations can change overnight, making it a tricky field for any company to navigate. One of the most important things to watch when evaluating SoFi is its loan origination volume. This is a key driver of revenue for the company, and while it's been growing steadily, it's also facing some challenges. External factors like rising interest rates, consumer spending habits, and economic downturns can all impact SoFi's ability to generate new loans. As an investor, it's crucial to understand that these fluctuations can create volatility in SoFi's stock price. SoFi's path to profitability isn't completely clear yet. While the company has shown impressive growth, it's still operating at a loss. The market doesn't always react kindly to this kind of news, and SoFi's stock has seen its fair share of ups and downs as a result. This doesn't mean the company won't become profitable in the future. It just means the road there might be a bit bumpy. If you're thinking of investing, you'll want to weigh these factors carefully. But here's the thing. Despite all the challenges, SoFi has a few key strengths that make it stand out from the crowd. The management team at SoFi has shown they're not afraid to take risks and make bold moves to grow the company. They've demonstrated resilience, which is critical in an industry that's always evolving. The question is, will these bold moves pay off for investors in the long run? One of SoFi's biggest advantages is its digital-first approach. Traditional banks are often bogged down by outdated infrastructure and slow-moving processes. SoFi, on the other hand, has built its business model around a sleek, user-friendly app that caters primarily to younger, tech-savvy consumers. This allows SoFi to operate more efficiently and keep costs lower than many of its competitors. The company's investment in technology is a significant competitive edge, allowing it to scale quickly and offer services that appeal to a generation of consumers who prefer to do their banking from their smartphones. SoFi has also recently expanded its product offerings. The company's credit card, for example, has been a hit with consumers and provides a new revenue stream. This diversification could help stabilize the company's financials and pave the way toward profitability. But it's not just about credit cards. SoFi is also making waves with its investment platform, which has seen a surge in users. People are looking for new ways to grow their wealth, and SoFi's easy-to-use investment products are capitalizing on this trend. While the company's growth is promising, there's no denying that SoFi's financials are a bit of a mixed bag. They've posted impressive gains in revenue, but those gains are still being offset by the costs of expanding their business. This makes SoFi a company in transition, one that could either break through to profitability in the coming years or struggle under the weight of its own ambitions. But here's an important point. SoFi's stock price tends to be sensitive to changes in broader market conditions. For example, rising interest rates can make it more expensive for the company to borrow money, which could squeeze profit margins. On the flip side, if interest rates stabilize or fall, SoFi could benefit significantly, making its stock more attractive to investors. This brings us to a crucial aspect of investing in SoFi: timing. The fintech sector is heavily influenced by macroeconomic factors, and SoFi's performance is no exception. When interest rates rise, SoFi's business model becomes a bit more challenging. But if rates fall, or even just stabilize, SoFi's stock could surge. So it's not just about understanding the company, it's also about keeping an eye on the larger economic picture. Experts are divided on SoFi's future. Some believe the company is poised to become a major player in the fintech space, while others are more cautious. One thing most analysts agree on is that SoFi's ability to navigate the regulatory landscape will be a critical factor in determining its success. Regulations in the financial industry are always changing, and staying compliant while continuing to innovate will be key to SoFi's long-term viability. Now, if you've been enjoying this breakdown of SoFi and finding it helpful, why not take a moment to hit that subscribe button? By subscribing, you'll stay up to date on all the latest financial insights and analysis from Money Ocean Channel. We're dedicated to bringing you valuable content that helps you make informed investment decisions, so don't miss out. Getting back to SoFi, the company's future hinges on a few key factors. First, they need to continue expanding their product offerings while keeping costs in check. Second, they must successfully navigate the regulatory environment, which is no small task. Finally, SoFi needs to prove it can consistently generate profits. Investors should watch for these indicators closely, as they will likely dictate the stock's performance over the next year or two. There's also the question of consumer behavior. As more people become comfortable with digital banking, SoFi is well-positioned to capture market share. However, the competition is fierce, and consumers are notoriously fickle. SoFi must continue to innovate and offer value to its users, or it risks losing them to competitors. This is especially important as the financial services industry becomes increasingly crowded with new entrants. Looking ahead to 2024, some analysts are optimistic about SoFi's potential. If the company can hit key milestones, such as demonstrating sustained profitability and continuing to grow its user base, it could see a significant uptick in its stock price. Some experts even predict that SoFi could reach new highs if everything goes according to plan. But, as with any investment, there are risks involved. If SoFi fails to meet expectations, the stock could take a hit. In conclusion, SoFi is an exciting but complex stock to consider. It offers tremendous potential for growth, but it also comes with significant risks. As an investor, it's essential to weigh both the positives and negatives carefully. SoFi's innovative approach to fintech has already disrupted traditional banking. And if the company continues on this trajectory, it could be a major player in the financial landscape of the future. Thanks for tuning in to Money Ocean Channel. If you found this video helpful, don't forget to like the video and subscribe for more in-depth analysis and insights. We've got plenty more content coming your way, so stay tuned and we'll see you in the next one.